Good morning or good afternoon, everyone. I'm very excited to be here today to talk about investment opportunities in next generation mobility. We're going to try to cover, as best we can, 3 topics. The first one being opportunities in autonomous vehicles. Next, we're going to talk about micro mobility solutions. And finally, if we have time, we'll talk briefly about electric vehicles. With all the promise of fully autonomous vehicles, we've yet to realize and to actually see a level 5 installation of autonomous vehicles. And this situation raises not just questions, but it also raises opportunities. And there are questions as to whether we'll actually get there, or the current platforms that we've backed will actually support a level 5 installment. So as an opening question to the panel, where do you see opportunities with autonomous vehicles at this point? Are we going to get to level 5? When are we going to get there? And in between now and then, are there opportunities?
When are we going to get there? I think my answer would have been different 3 years ago than it is now, and perhaps even a year ago from now, right? I think from the outside looking in, and in some cases from the inside looking in, I think what we've seen is a bunch of companies that have asymptotically approached not good enough. And I think that's a troubling thing, right? Because I think that if you're at one of the big players that's been funded well, that thinks that they're a year away has been a year away for a few years now. And what you've seen is, I think initially there was a massive amount of progress just because you collected more data and you got your system to be a lot better than it was. You could handle a lot of the normal cases. And then you had a couple of bumps along the way of massive gains, a new algorithm family came out and you got a lot better at something, or a new sensor type came out and you got a lot better at something, or the amount of compute that you had access to came out and you got a bump in something. And sort of the high level question I think I have is anybody on a path that actually crests over into good enough? Or are most people sort of deluding themselves into thinking that that line that's been approaching good enough is they've been predicting when that crossover point's going to happen, and it's actually not going to happen? That's sort of the big question. And I think as an investor, there's a couple of ways to think about it. One is, hey, if you aren't within one of the ecosystems of the really well-funded players that exist already, that are way ahead, you shouldn't bother investing. The other sort of, I think, way to think about it, and it's the way I think I choose to think about it, is maybe the head start wasn't really a head start for the companies that are already out there that are quote unquote close, right? Maybe instead it's like an anchor, because they have been so close that it's really hard for you to throw away everything you have and start again on a completely different trajectory and a completely different tech platform that can help them get across the chasm of not good enough. And
Tree, for example, the architecture that was established in these firms might not be the proper architecture to get them over the hump.
Exactly, right. I mean, you can think about it if you look at almost every one of these autonomy teams that have sort of gotten close, right? They all sort of, in some way, shape, or form, within their bios, within the companies themselves, they talk about the 2007 Grand Challenge, I was a part of this team, right? And they carry with them some of the knowledge they gain from that, and the success they gain from that, and the architecture they've built around how they've designed their system is based on that, right? And in some ways, all these companies actually have very, very similar architectures, and maybe it's the wrong one.
And so from the first phase may have, it was tens of billions of dollars that went into these platforms, and we all know their names. But it begs the question whether the second phase might be, learn from the mistakes of the first, or invented a completely different architecture that may actually solve for the level 5 problem.
Yeah, I think that's a great way to synthesize it, right? I said, I choose to believe that there's still awesome companies to back in the space, and this is still an absurdly large market, and there's a huge opportunity for investment here, right? And I think what I further choose to believe is that the opportunity exists. If in these businesses that have winner take all kind of dynamics, you think that if you're not one of the winners that there's no opportunity, but there is no winner yet. it's entirely possible that all the investment that's gone into these companies so far has been not good investment, and there's an opportunity to start something now, catch up really fast, and surpass everybody else. Like the classic innovator's dilemma for the initial parties, that they've already spent all this money, they feel like they're close, and they're not going to like think about throwing away what they have and starting all over again.
And Sri, to that point, maybe there are other opportunities that might not be reflective of getting to a level 5 fully autonomous solution. Like Quin, there are examples of off-highway. There's off-road, different agricultural, mining, and other examples which prove to be, which potentially could be very vast opportunities from an investor's perspective.
Yeah, there's a couple different applications of autonomy that we've looked into, right? So you can talk about on-highway robo-taxis, you can talk about on-highway trucking, you can talk about autonomous delivery robots for delivering packages. You can also apply autonomy to agriculture, so automated farm vehicles, construction, automated skid steers, and also mining. And today there's already plenty of, call it level 5 mining vehicles. There's vehicles running around mines around the world with no drivers involved, right? But there's only a few players that are supplying into the mining space. And so we recently invested into a company that is actually founded by 2 Indian entrepreneurs called Safe AI, that's essentially creating autonomous kits, retrofit kits, that would allow an existing human-operated mining truck to become autonomous and automatically pick up rocks, essentially, deliver those rocks somewhere else and drop them off. We've also invested into another company called Verdant that is doing autonomous, essentially fruit pickers. So autonomous vehicles that are gathering fruit, trimming and pruning and spraying and gathering fruit, because there's a labor shortage in many parts of the world, not just here in the U.S., but in many other parts of the world. And so we've invested in those companies because the time to market for off-highway autonomy is a lot shorter than it is for on-highway autonomy, because you don't have as many safety risks of running into somebody on the street, and you don't have as much government regulation of how vehicles are operated on farms or mines or construction sites. So absent in our portfolio is any startup whose success is predicated on mass adoption of level 5 autonomous vehicles on highways. We have not invested in any company in that space because we think that the time to market for full level 5 autonomy, where you have no steering wheel, no human intervention, is longer than 10 years. And we as VCs need to live in 10-year increments by managing 10-year funds.
And that's interesting because, from a 30,000-foot view, we tend to think that the large established, the Cruise and Uber level companies are the only ones who can solve problems, with this from a level 5 perspective. But if we go further down, the hurdle that we have to clear is much lower, and it's clearly, as Quin indicates, it's presenting investors with a great deal of further opportunities. In terms of micro-mobility, Ashish has been in this space for a great deal of time. What we're seeing is the large platforms like obviously Bird and Lime and Uber and Lyft enter cities on a national scale. But at the same time, we're seeing local operators emerge in a lot of these cities, which is again presenting interesting opportunities from an investor perspective. It also begs the question, do you need to build a national scale, or can you operate many of these companies on a local scale? Ashish, can you comment in terms of a national platform versus a local competitor and the opportunities for investors?
I think we have seen both sides of things. I think most of the time, I think people think about these markets as local markets, which are basically playing in those things. So I think there are definitely synergies when you think about having a national player, because you have playbooks that you can come up with. But at the same time, there are local players that might have the local knowledge of those markets. Like, for example, as we can see, looking at what Uber have done in Russia, in China, and in Southeast Asian markets, they were strong, but then at the same time, there was a local player that was actually able to go in and being able to compete with them, and in some cases had a better market share, being able to do certain things which were first innovations for the local market, because Uber is trying to basically bring a standard platform and then trying to innovate in those markets. Whereas if you are a local player, you already understand the local problems, so you can try to do those things. And there are certain specific examples, like for example, in India, they were like Ola have actually already launched like tablets with videos that you can watch in the cab as you're going from the entertainment perspective, because in traffic, if you look at average amount of time spent per rider during each trip is much higher in those areas, because the traffic congestion is so much higher. Because of those things, it's like some of those things, it takes time for them. So there are definitely local players that we have seen, and that's consistently proven both in ride hailing as well as for Bird and Lime to kind of like go into all of these international markets. And I think taking a step back to answer your previous question, which we were talking about, I think my understanding is that sometimes, technology curves are ahead of market adoption curves, specifically in level 5 autonomy, as you think about those things. So the way we think about these things is based on some basic frameworks. Like, for example, one of the frameworks we use is, as you look back into like 90s, one of the first things that were automated was cleaning. Like when iRobot came out, because it's a very small constrained environment of your home, in which once you map it, the home environment doesn't change much. So iRobot was one of the first robots to kind of like do that. And on the other side, when you think about self-driving car, the environment is changing on a regular basis, and the amount of decisions you need to make is also very high. So that's like another extreme. And one of the other things we look at is like, if you look at the safety case is very strong for all of these self-driving autonomy cases. Like if you look at XY graph, where on x-axis you have the cost of making a wrong mistake, and then on the y-axis you have number of decisions being made per second. On one side you have companies like Facebook, which are making like thousands of decisions, but then cost of showing a wrong ad to you or me is very minimal. But on the other side you have self-driving cars, which are capturing all this data and making all these decisions, but the cost of making a wrong decision is that somebody can die. So I think based on some of these frameworks, that's how we think about how market adoption will be driven, even though technology might be there or might not be there. So I think in some of those cases, we're talking about people's lives. So.
And Ashish, when you're talking market adoption, there's also an adoption just from from a people level, in terms of are they going to accept being in a vehicle without, that's in a fully autonomous situation. You had an example we talked previously about various markets in terms of how they wind up adopting new products.
I think it's kind of like also goes back to, right? You have to think about consumer behavior, because does the consumer feel comfortable kind of like adopting those things? Like for example, if you think about people who actually kind of like ride on these scooters are people on the younger side, but when you think about like, hey, is someone like who is like 40 or 50 or 60 years old, do you think about what is the use case in those scenarios? So I think we also think about from the use case perspective specifically, which can like also drive some of the decisions for investments from our perspective.
And again, on the micromobility side of things, are regulators going to catch up? Are they going to be a significant drag on this business, or is this a business that's going to see widespread adoption like Uber and Lyft, because the utility for passengers was so high that they were able to overcome the regulatory hurdles?
I think regulatory hurdles kind of like play a significant role, and it's kind of like we can see that. The whole idea of like, going in and breaking the laws, and then basically kind of like, Uber was the first one to do that. And of course, there have been examples in the previous generations if you look at from that perspective. But a good way to also think about that is like when you look at China, the any kind of like use of public land is like unless you become big enough, that's going to create a lot of nuisance. People are government kind of like does not take a hard hand. So if you look at the axis on that side, and on the other side you have like the US, where basically if you try to go and deploy bikes in San Francisco without taking an approval from the from the local city government, it becomes very difficult, because Blue Gogo, there was a very famous case where Blue Gogo is a famous Chinese bike manufacturing company similar to Ofo and Mobike. They came out over here, started deploying bikes like hundreds, but then they got like cease and desist letter from the local government, and then they had to like overnight just like dump the bikes, and they just left. So I think, and everybody else can like fall into that regulatory approval. So you have to definitely understand what is the regulatory approval landscape in the environments when you're thinking about how you're going to go to the market.
And local operators clearly would have clearer insight into the local regulations.
Yes, that's true.
Okay.
We've steered clear so far of micromobility, and for one reason is because of our business model. The other reason is because of that market. We do think that micromobility is going to achieve mass adoption. Scooters, bikes, et cetera, are going to achieve mass adoption by people, but we've been concerned that we as a firm, would we be able to capture that value? Would we be able to make money investing into that space? And the reason for that, so in terms of our concerns around the market, is the companies and the offerings are not really differentiated from each other. In our opinion. The companies are differentiating by way of capital formation, meaning their ability to fundraise, as opposed to their ability to offer a differentiated product. And if you are a deep-pocketed investor and you can go and fund and kill off all of the other competitors, maybe that's a winning strategy as an investor. But we're kind of a fairly smaller fund, so we don't have billions of dollars to throw around to try to kill off all of the competitors. So the go-to-market for micromobility, it's essentially step one is buy scooter from Xiaomi. Step two, write app. Step three, throw scooter on sidewalk, right? And you're in business, and you can generate mega GMV from that. But that also means that everyone else can do it, and that comes back to the question of local versus regional versus global. And I think that's why we've seen more local players be able to thrive in the micromobility space as compared to in the rideshare space, where the barriers to entry in rideshare are much greater because you're running a two-sided marketplace, and you have to go to market to the drivers and you have to go to market to the riders. Whereas in micromobility, you're typically running a one-sided marketplace, which is AKA a service, which makes it a lot easier for new folks to enter.
I think I have a different point of view than that, because other thing what's happening is the cost of customer acquisition online has become so high that people have started thinking of hardware as a cheap way to acquire customers. So one of the ways to also think about is if I'm Uber or Lyft, if I just kind of put these scooters and I basically subsidize my cost of taking that short-term ride, even though I'm taking a loss, but that user would actually stay within my ecosystem rather than going to another one. So that's why, Uber and Lyft both have gone and acquired companies in those spaces which are doing short distance mobility on that side. So I think that's also another angle where people are thinking about hey, if I can put $2 or $5 hit on that, because acquiring a new customer for me, it would take $20, $50 or $100, because it's everybody's trying to go after the same supply of drivers and users.
So effectively then, the micromobility solutions would be a loss leader to bring in customers to their platform. That's interesting. I haven't heard that take. Shri?
I was going to say the other, I think, major difference that's true between in the world where there's a duopoly between Uber and Lyft and the micromobility players is and why I think regulation will end up being a bigger problem for the micromobility players is I think all of us have at some point or another hated taxis, right? I think that there was a legitimate hatred of the existing infrastructure, and when somebody came out with a much easier way to get a taxi solution, we happily jumped on it. And I was one of those people who, when I got an email from Travis, I was living in DC at the time, and help us fight against the local taxi commission. I was yes, I hate the local taxi commission, right? Whereas every time I come out of my building, and I remember when, at least last year, before San Francisco cracked down on the scooters, right? I was as irate as the next guy. I can't even walk on this sidewalk. There's 17 scooters in front of me, right? And so one thing was solving a real problem I had, whereas scooters and bikes are creating a new marketplace or they're solving a problem that I didn't know I had. And as a result, there's some people who love it, and I know plenty of people who scooter and bike around everywhere, and that's great. And for other people, it's hey, I loved walking to work. Now this thing is in my way. And so I don't think it's as clear a problem that it's solving for people, and as a result, they've run into more regulatory challenges as they've grown.
Thanks, Shri. Can we move quickly into electric vehicles? It's a big topic, and it's a big source of potential investments, as there seems to be tailwinds coming, significant tailwinds coming from governments all over the world to push fleets into, or push both individuals and fleets into an electrification strategy. We're seeing examples of Uber has made a significant commitment in the London, UK market to electrify most of their fleet. That causes huge challenges, not just to the drivers, but operationally, as you've got charging solutions. You've got vehicle optimization problems in terms of the vehicles being down and they're not being charged. In India, you're seeing even more pressure, or at least push from the governments to electrify almost all forms of transportation. From an investor's perspective, these tailwinds present interesting opportunities. Quin, would you like to start? Quin has an interesting history in electric vehicles, but please go ahead.
Yeah, I spent some time with a company called Better Place doing electric car recharging infrastructure years ago, 5 years with that company, and it eventually went to a better place after $1 billion were sunk into it. But learned a lot of valuable lessons from Better Place days. So within electrification, what are the pain points that need to be solved, right? So you need to be able to charge these vehicles. You need to be able to store energy. You need to be able to convert that energy into kinetic energy. Electrical energy into kinetic energy. So motors, batteries, inverters, charging stations and whatnot. We think that electrification is going to be a slow and steady, follow a slow and steady adoption curve. We don't see this explosive overnight adoption of EVs because cars have long lives. They're not 2 years, in 2 years and throw them away like a smartphone, right? They live for 11, 12 years. So if your business model is predicated on selling, for example, a lot of electricity to EVs running around, whether it be in India or whether it be here in the US or elsewhere, you're going to be waiting a long time to be selling a lot of electricity. So we invested into a company called Volta Charging that is essentially an outdoor advertising company that's masquerading as an EV charging station company. So what they do is they install these stations in front of shopping malls and Whole Foods and whatnot, and then they sell ads on the charging stations, and then they give away charging for free to consumers. Right, so it's a win for the shopping mall because they get an amenity that they get to provide to consumers coming into shop. It's a win for the advertisers because they have all these people walking in and out of the shopping mall who are seeing the ads, and it's a win for the drivers because they get a free charge, right? So this company actually is completely decoupled from the pace at which EVs are adopted in mass. They don't care if someone is charging or not. So that's kind of a one bet that we placed based on learnings from going to a Better Place some years ago. Our business model is a little different from a typical VC firm in that we only do ground transportation and mobility. We don't touch other sectors, and a lot of our limited partners in our funds are large transportation incumbents, including from India, among other places, motorcycle OEMs, car OEMs, fleet leasing companies, dealership groups, and the like. And these folks have a lot of capital assets and ability to scale, but they're not as quick at innovating, and so they leverage startups for that. And I mention that because a lot of the investments that went into electrification years ago were investing into battery companies and battery manufacturing and the next Tesla. We haven't been investing into those big capital-intensive EV OEMs or battery companies because it's hard to generate a venture return on that, and because we have all these powerful incumbents behind us and partnered with us as LPs who can scale that. So why not just partner a startup together with one of those incumbents rather than replicate one of those incumbents and all their manufacturing capacity?
Can we talk specifically about the Indian market and innovations and the tailwinds that are coming from government regulation?
Yeah, so in my experience, so we have a number of LPs who are from India, and they're both tier 1 suppliers, but also vehicle OEMs over there. So the government in India, from what we can see, is not interested to adopt autonomous vehicles. I've even heard some cases where the government's actually come out against it, maybe as a labor issue. But they are quite interested to embrace electric vehicles, but not so much in long-haul trucks. So India is going toward Euro 6, which is basically emission standards for combustion engines for long-haul trucks. But India does seem to show interest in electrifying two-wheelers and three-wheelers, so tuk-tuks and motorcycles essentially, and to a lesser extent passenger cars. But India doesn't have necessarily all of the in-nation capability to produce all of the batteries and motors and inverters and whatnot. And so a lot of the Indian corporations are right now looking abroad to find some technology related to electrification that they can then bring into India and mass produce to support the adoption of these electrified two-wheelers and three-wheelers.
I think from what we have seen, at least, is, and that's also my personal kind of like observation, is like, first of all, we spend a lot of time in markets where we can learn from. So I think China is one of the leading markets where they have spent a lot of time kind of like trying to electrify. Like, for example, if you go to Shenzhen, every single cab and public bus are electrified already, like, which is significant because I don't know of any other city that have done that for 100% of their fleet. Going back to India, I think from that perspective, what's happening is there are fundamental issues, like going back to your local things, right? I mean, for example, these scooters might not, like Indians, the culture of the local culture of like riding scooters is perverse into the economy, right? For example, in the US, nobody is riding like two-wheelers because everybody's riding like big cars and stuff like that because of safety issues and long distance travel. Whereas in India, I mean, of course, so what Quin is saying is very much true in terms of companies that we have seen which are doing these types of like ride sharing. There are companies now that are coming up like Vogo and a couple of other ones that are focused on doing two-wheeler ride sharing from that perspective, where in this case, instead of doing ride sharing, you basically go rent the scooter on a per hour basis and then you can go from point A to point B. And they are slowly kind of like trying to partner and kind of like come up with the fleet on the electric side, but the issues are the fundamental infrastructure of charging doesn't exist. So you have to kind of like figure out like how can you have that duopoly where you are building the infrastructure as well as building the kind of the focus on the actual business. And that's where when you're looking at the investments, like for example, when Amazon was investing $1 in India, they already had a business over here, and they were just like in the US. They already had a payment system. They already had the infrastructure built in terms of doing the FedEx delivery, but every dollar was going into kind of like building the business. Whereas when Flipkart was doing that, they had to build out their own infrastructure. So from that perspective, you also have to understand and compare the opportunities and what are the things that the company have to do to succeed to get similar type of returns.
And that makes sense for sure. Like it's interesting with the chicken or egg problem that exists with electrification, with driving electric vehicles. And you have this pressure from governments that are coming down to saying to private corporations that you need to follow these following rules going forward, but the infrastructure isn't there. It's going to be an interesting dynamic over the next few years, how private companies react to this pressure.
And India is actually reviving battery swapping.
Oh, really?
So there's a gentleman named Chetan Maini who has a really cool company called Sun Mobility. I thought Better Place. We were doing battery swapping. I thought it was long gone for a while, but now India is resurrecting it, and there's some initiatives now to do battery swapping on two-wheelers and three-wheelers over there.
Okay. And is that unique to two-wheelers and three-wheelers? Like, is the actual structure of the battery smaller and it's
Yes, yeah, the batteries are smaller. In some cases, they can be lifted by hand. You don't need a big robot. So like if you're swapping a battery on a big bus, right, you're talking about thousands of pounds of battery, and so you need a large amount of robotics to do that. So you can have much more simple automation for swapping out tuk-tuk batteries.
I think there's a company called Gogoro, which was actually one of the first ones to do that out of Taiwan. And I think what they did was to prove that it actually works. They partnered with Bosch to launch their two-wheeler company in Europe, because there is a lot of culture of riding two-wheelers also in Europe from that perspective. And they have a significant amount of capital from Alibaba to kind of like take their technology and scale it. Because the idea is if you don't have electric chargers available, like battery swapping is one of the easiest way to kind of like, because how do you can like have that hybrid period where you're going to have build the infrastructure as well as also have battery swapping available?
Yeah, that makes sense as well. So as we have a few minutes left, we have a couple of questions or requests from the audience for a couple of questions.
Oh, hi. Thank you very much today for giving your insight into the NextGen mobility. So I had a question on shuttles and rideshare with shuttles, because May Mobility and few others tried it. So any insights into how that's going to be going forward, that'll be good to hear. Thanks.
Sure. Yeah, so I'll answer and people can hop in, I guess. I mean, I think of that as sort of a similar angle to what Quinn was talking about with off-highway, which is, hey, if we don't believe that a system can be built right now that can handle all use cases, can we find specific use cases where, you know, autonomy can actually be economically viable and safe, right? And so there's May, there's Voyage, there's Optimus Ride, there's several of them, and they're all sort of, I think, you know, a lot of people think, hey, you know, the right answer for mobility is actually on highways because it's a lot simpler environment. It turns out driving 70 miles an hour or having a giant truck driving 70 miles an hour without a driver is a very scary thing. And so the better answer is to have things going 20 miles an hour, and I think that's basically what they're chasing down. And I think the nice thing there is that it's entirely plausible that we're already there in terms of the technology to be safe in those environments. And the question for all these companies is going to be, can they get to market? Are there opportunities? Are these environments such that you can make money from customers who are used to hopping in their car and taking a 2-mile trip? Or is it better in some way than having a small, you know, shuttle service that's human driven? And I think that's sort of the interesting economic question, not necessarily a technology question.
Great, thank you. We are officially out of time. Thanks to all of you for joining us. Thanks to our panelists as well, and TiEcon as well. Have a great day.